Okay, awesome. What is going on, guys and girls? Welcome back to another session of Off the Charts. This is your weekly dose with myself and the team at ThinkCapital, and an opportunity for you guys to get to know yourself a little bit better, understand your psychology a little bit better, and ultimately to improve your performance and your consistency in the markets. That is the aim of everything that we are doing here. I've got a great session in store for you today. And as always, it's going to be a raw, honest, transparent session based on experiences that I've been through, lessons that I've taken from clients, and things that you guys can use to help improve how you trade in the markets. First and foremost, if you are tuning in on YouTube, make sure you say hello. I am keeping an eye on the conversation. I will do my best to keep up with it throughout the space of today. And of course, we will do a little bit of Q&A towards the end of the session. I want to give a shout out to Trader Bull. Trader Bull has basically been doing a running countdown for the start of today's session. So shout out to you. Dedication at its finest. Something that we love to see here. Of course, as well as the session, as well as the Q&A today, we're also going to be doing a giveaway courtesy of the team here at ThinkCapital. We have 3 $10,000 challenge accounts to be giving away to those of you at the end. And this week, we're going to be putting a slight twist on the giveaway. We're going to be rewarding those of you that are most active, those of you that are here, and most importantly, those of you that are paying attention to today's session. So partway through the session, I will be giving you guys a word, a phrase, something to add to a hashtag towards the end. And if you can correctly comment that hashtag, you will be included as part of the giveaway for today's session, and therefore up with a chance to win the prizes up for grabs today. Okay. So without any further ado, let's get stuck in. I love the excitement in there. Trader Bull, I was so excited, boss. I appreciate that. I'm glad to have you back here again. Haydar says, this is my second time I joined the live stream. Haydar, thank you so much. Welcome back. It's great to have you with us again. Cheesy for the giveaway. We're gonna try and keep this as fair as possible and reward those that are active and paying attention. So we'll keep this as fair as possible. Okay, so for today's session, I have a good topic, and one, honestly, that is very much relevant for what I'm experiencing this month, right? Some of you maybe follow me on social media. X is usually my most popular platform. It's the one that I'm most active on, and I go by Trading in the Now. Now, if you follow me on there, you will understand that I am having a pretty rough week, well, a pretty rough month in the markets, is probably the best way to put it. I'm currently in a little bit of drawdown, and it's not a bad thing. It's just the cycle playing the odds of probability. This is the way that this game goes. Anyone that tells you that they're winning all the time, there is something not quite right about that. Periods of drawdown are a very, very normal thing. And I think the more that we can talk about it, the more we can be honest about these sorts of things, the better your expectations will be. And that's what's going to help your performance in the markets, right? Most of the issues that people have with drawdown is they don't anticipate for it. They don't have a plan or know what to do when it occurs. And so they panic, they become fearful, they get angry, and they try and beat their money back out of the markets. It's okay to feel those emotions. It's not okay to act on them and to do something silly when it causes a detriment to your account. Okay? So today's session is tailored off the back of what I'm experiencing this month and aim to give you one of the lessons that really helped me to become better at coping with drawdown. Because I promise you, if you haven't experienced it already, it's going to happen. It's not personal, it's statistical. It's part of how every strategy operates over a large enough sample size of time. And your ability to succeed, your ability to successfully make money from the markets over a large enough sample size of time, it completely relies on the idea of you being able to actually know how to cope with these periods. And not just cope, but actually bounce back, recover from that drawdown, and actually work yourself into a profit where you can go in and extract your next payout from the markets. Okay, so today's session, we are going to be talking about detaching from money, right? Detaching from money. Because ultimately, I'm hoping just by the sounds of that title, you guys are aware that it's very, very difficult to win if you are emotionally attached to the outcome of every trade. And for some of you, that's going to be the outcome of each dollar that's on the line. For some of you, it's going to be every single pip that a trade moves for or against you. The more and more you find yourself attached to the market, the more and more control the market will have over you. And that's something that we need to break free from if we want to find consistency. I found as part of my journey, and I see this as a consistent pattern with many of the traders that I work with in this day and age, is that most traders don't fail because they lack knowledge. Trading is not hard because we are struggling to draw up support and resistance or identify order blocks. The raw and honest truth is you could teach a monkey how to do technical analysis, right? You could probably get a chicken to peck its way to finding a profitable trade. That's not the hard part of trading. The hardest part of trading is actually understanding how to cope in those periods when nothing goes your way, how to deal with yourself when you're feeling a certain type of thought or an emotion which is swaying you to go against your plan, right? So most people fail because they have this attachment to the outcome of the trades and specifically the money that is on the line. And the irony behind all of this is the more that you need to make money from the markets, the harder it becomes to follow your plan. That's the reality of what we have to live with. And again, this is something that I know firsthand because I found when I started to have breakthroughs in my trading, this is 2017 going into 2018, I decided to quit my day job. And I decided I was going to attempt to full-time trade. The problem that I found, the moment I had no monthly income coming in and I needed the markets to fund my life, to pay my bills, to put food on the table, I became an infinitely worse trader. And so I very quickly realized that I needed a plan. I need a framework, a process, a mental way of approaching this game where I could be detached from money and therefore allowing me full clarity in order to follow my plan. Okay? So the first thing I want you guys to understand is that detachment from money, it's not about not caring, right? Money is an important thing. We all understand what money means to us. We all know why we need more of it. It's not about not caring. It's about getting to a state where money doesn't influence your decision making. It's okay to care. It's okay to feel a certain type of way. I've been frustrated over the space of this month, having not made any of it as we've been through the last few weeks. I took my last loss 5 hours ago and I was annoyed. I was frustrated. It's a tough thing to go through, especially when you invest a lot of time, energy, hard work into this game. To not get anything in return out of that, it's very, very difficult. The difference is you can fully train yourself to work in a way where whilst you do care about money, you don't allow it to influence your decision making. And that's the skill set that I want to help you guys to instill from today's session. Because the honest truth is, when you learn to detach yourself from money, you will find that you will create space between fear. When you create that space between fear, it creates a wall between you and your impulsive behavior. And that's a really important part of being consistent. When you have that gap between impulsive behavior, then and only then can you actually start acting like a professional trader. And that professional trader is not someone that has this mystical way of analyzing the market and they don't care about losses and they don't care about periods of drawdown. A professional trader is simply someone that knows how to manage risk. That means maximizing their upside and minimizing their downside. Okay? So the first key important lesson of today, if you can't emotionally afford the amount of money that's on the line, it is going to have an impact on your ability to execute your edge. And that's something that most people never actually able to separate. And that's why they get so emotional as part of everything that they do. Okay? So we're going to cover a few important parts of this today, right? The overarching goal, as I mentioned, is to separate yourselves from money. We're going to start off talking about why detaching yourself from money is so important, why it's often so difficult for so many of us from a human and a psychological perspective. Then we're going to talk about some really practical ways to actually start detaching yourself, and then also include how to remain detached over time. Because the one thing that I have found, along with many of the psychological games that we play here and we try and improve on, you don't fix them once and then suddenly they never come back. These are something that you have to constantly work on over time. I have seen many people over the space of my career so far that have made money for extended periods of time, and it often has led in a bad situation just because of one moment, one experience, one bad week, one bad trade, one period of drawdown that they weren't able to recover from, right? Then towards the end of the session, we'll do a little bit of reflection. We'll open up things for a little bit of Q&A. And then, of course, most importantly, we will be doing the all-important giveaway. And again, as a reminder for each of you that are tuned into the call, partway through today's session, I will be giving you guys a specific hashtag that I want you to add onto your answers at the end to keep you eligible to take part in today's giveaway, right? So make sure you're paying attention, make sure you're locked in, and if you are focused, you will be included as part of the draw and will be in with an opportunity to win one of 3 $10,000 Challengers accounts, courtesy of the team at ThinkCapital. Okay, right. So let's start at the very, very beginning. We want to understand why detachment is so important. I'm going to spend a few minutes on this because I presume most of you will understand exactly why this is the case. If you haven't tuned out of a call like this yet and you've stuck with me and you can resonate with the things that I'm saying, I can only presume that you understand that learning to detach from money is very, very important. Now, from a trading perspective, the reason why it carries so much weight is often because we can't control when we make it. This was a flawed mindset that I brought to this game when I first started trading. I was under this illusion that at some point in time, there was a certain amount of knowledge or analysis that could prevent me from either taking a loss or going through an extended period of drawdown, whether that was a few days, a few weeks, a month, a quarter. That's the reality of this game, right? The truth is, the market will pay you out when probabilities align. There's nothing you could do to influence when the market is going to pay you out. You can't control the outcome of the next trade. Yes, you can improve your odds of taking a high probability setup, and that improves your odds of making money, but it doesn't determine or guarantee that you're actually going to get paid based on the outcome of the next trade. The hardest part of this game is understanding that you could do everything right in terms of following your plan perfectly, but you could actually still lose money today. And that's what so many of us tend to struggle with on a day-to-day and week-by-week basis. And so the thing that we have to start to accept is that your goal is not to control the outcomes. And this is often why you'll hear me say that I'm quite against setting targets to achieve by the end of a week or an end of a month, because we have no control over achieving those targets. We can only control our behavior. We can only control how we execute, how we manage, how we exit positions, and most importantly, how we govern risk throughout that entire cycle. So if you're setting yourself a goal to control something which is ultimately uncontrollable, this is why you're setting yourself up for failure and why remaining detached from money is actually so important for you, right? Secondly, you have to remember that as part of the game that we play, money is nothing more than just a tool. It's something that you have to bring to the game if you want to be able to make more of it. Because the reality is, if you do something silly and you lose all of your money, you lose all your funding, you lose all your personal capital, so you can't fund a personal account, you can't buy more challenges with ThinkCapital, you can't trade. It doesn't matter how good your skill set is. It doesn't matter how good your analysis is. If you don't have capital of your own or external capital to trade on behalf of a prop firm or an investor, you're unable to actually work. You're unable to actually earn a living. So part of what you bring to this game is not just skill. It's not just discipline. A big part of what you bring to this game is understanding that money is the tool that you need in order to make more of it. And so if money is a tool, you have to start thinking and treating it just like a tool. Money is not status. Money is not a reflection of your intelligence. It's not a reflection of your self-worth. It's simply a tool to allow you to execute capital and risk into the markets in order to try and make more. The moment you don't have that level of detachment and money becomes emotional, every rule that you have becomes negotiable. It's no longer a rule, it's an option. And that's something that you need to be able to break free away from. The reality is, and this is something again, I felt many times in my journey, I find when you have a certain level of attachment to money, it actually goes on to destroy your discipline. You could be ambitious, you could be hardworking, you could be patient and disciplined in many other areas of life. But if you are a slave to money, that is something that is very, very hard to let go of. And it will outweigh your analysis, it will outweigh your self control, it will outweigh your willpower, and it will make you hesitate. It will make you give up profits. It will make you size up too much on your positions. It will make you move your stop loss. It will make you chase losses when you experience them, right? Most people, when they fall into this trap and they are attached to money, they only trade because they want to feel good. They want to satisfy their ego internally and not really because they are focused on actually executing their plan. All right. When you have a certain level of attachment to money, every trade feels like the only one that matters. Every trade feels like survival. And when you're putting that much on the line, it only ends up in one place. It ends up with you feeling fight or flight. It ends up with you feeling stressed. It ends up with you feeling emotional. And again, this is not the best headspace to be able to operate from if you're serious about being consistent as part of your approach in the markets. Okay. Now, we know detachment is important, right? We all understand it's important. And again, I presume if you're still here and you're tuned in, you understand that it's something that you probably need to improve on. But before we move on to the practical things that you can start to do, I think it's helpful to understand why why detaching is actually so difficult, right? Why is detaching from money actually so difficult? The reality is a big part of it comes back to how we are wired as human beings. Because the reality is we're not wired to perform. Our brains have come from a point in time where the only thing it is concerned about is survival. It's a mechanism that helps you to stay alive every single day. And for 99% of human history, resources are a big factor which allow you to survive. In today's day and age, what's the resource that we all value? What's the resource that helps us to live on a day-to-day basis? It's money. So when you lose money, your brain interprets that as a threat. It doesn't see it for the black and white transaction that's happening in the markets, right? We are inherently attached to money because we see it as a tool for survival. We see it as a means to survive and as a means in order to thrive as part of everything that we're doing in life. Now, to add to this, in today's day and age, we've been conditioned by culture or society or social media that we are taught that if you have more money, you're a better person or you have a higher status. Social media is the worst place for this, because if you go onto social media and you look up anything to do with trading, it just seems to be fast cars, fancy watches, private jets, people just having an abundance of money. And we believe that's what trading is about. And therefore, when we don't get it, it's logical to feel angry, right? It makes us feel FOMO. We have to remember that these highlight reels that we often see online are not a true reflection of what the world of trading and investing is actually like. And that's something that we have to be able to separate ourselves from. The reality is, and honestly speaking, I don't think this narrative will ever change. I find that everyone online looks successful. Everybody looks successful. You can fake anything. You can exaggerate things online. It's easy to look successful. But that's the thing that often makes you feel like you're behind when you're comparing yourself to the vision of what you are seeing online, which the majority of the time is not even true. That's how bad this space has become. It's your responsibility to be able to create that separation. It's your responsibility to recognize that this is not good for me psychologically and I have to be able to do something about it, right? There's a couple of other reasons why detaching is so difficult. The first one, and again, it's a psychological one, it's loss aversion, right? We call this loss aversion bias in psychology. It's a cognitive bias. And this is where taking a loss feels twice as painful as winning, right? You could lose $100 today and you could make $100 tomorrow, but the pain of today will outweigh the pleasure of the gain tomorrow. That's our natural psychology, right? This naturally creates this defensive or desperate emotional behavior which tends to lead most of us astray. And again, this is not a personal thing. We've all been through this at some point in time. It's biological. It's how we're wired from the inside out. And so you guys have to understand that this is how most of us operate. And therefore, you have to train yourself if you want to learn to be able to react in a very different way. Okay? It is completely your responsibility. You also need to be aware of these other external driving forces that force this need for instant gratification onto you, right? Whether it's things like Amazon Prime, right? Next day delivery. Some places they're even doing same day delivery, right? It could be little things like just scrolling on social media, Instagram Reels, your TikTok For You page. They all create this need for an instant hit of dopamine, right? That's all we are looking for nowadays. We want dopamine and we want it now. And anytime we don't experience it, we go looking for it because we're expecting fast results, fast wins, instant gratification. The problem is trading punishes that mindset in the long run, right? Sometimes you might do everything right and you might actually make money, but in the long run, that's going to be something that punishes you over time, and it's something that you have to start breaking away from. So for me, the thing that you have to take away from this is that as human beings, we have to develop this ability to actually start delaying gratification. If you can't put this delay in between you today and the version of you that wants to feel good and achieve all your dreams and goals, you're going to end up rushing the process. You're going to end up chasing the money. And again, we're back around in this cycle of focusing on something which you ultimately cannot control. And that's something that has to be broken. Okay? So I'm hoping this is clear. I'm hoping this is relevant and you guys can resonate with everything that I'm saying here so far. And I'm hoping you guys have a better understanding, at least for now, over why most people are struggling to detach from money and actually why it's so important that we move away from this. Okay. It's a very, very important part of what we're doing here today. Okay. Let's have a quick catch up on the chat. I can see many of you are very, very active today. Trader Bull says, we follow the plan to increase our winning probability, but we can't control the outcome. Exactly. That's exactly the lesson I want you guys to think about off the back of today. Without capital, you are not a trader. Very, very true, Nelson, right? Traders need a proven system which take years to build. The reality is, and often cases they do, right? It's not just taking it's not the system that often takes time to build. It's finding the system that works best for you, which is where most people have an issue. Crazy Kiku, I hope I'm pronouncing that correctly, says, I'm kind of having fun. That's always a good thing. I'm really glad to hear that. The amount of discipline needed to be profitable should be studied. Facts. Rules become an option when you're a slave to your money. Yeah, I mean, it's a good quote from today. I'm obviously going to be biased because I said it a little bit earlier, but it's a very good quote. Only risk a tiny percentage, like 1% per trade. If losing it feels okay 100 times, you're free. It's a good way to look at it. Completely agree with you. Pressure from social media. I can see there's a couple of questions here from Lyra. Lyra, please save these towards the end. I'll copy and paste them into my notes, and I will come back to that in the Q&A portion of today, if that's okay. I will be sure to give you a response to that. So stay tuned to the very end to have some clarity on that. Okay, cool. So, all right, I want to take a very quick break away from the topic of today. And as I mentioned, courtesy of the team here at ThinkCapital, we're going to be doing a little bit of a giveaway for you guys today. We have 3 $10,000 challenges to give away for you guys on the call. Now, how we've typically done these is towards the end of the session, I get you guys to comment a bit, one of your biggest lessons and takeaways from today. And I get you guys to end it with a specific hashtag. Today, I'm only going to mention the hashtag at this point in time, right? So take note of this, because if you want to take part in the giveaway at the end of today's session, I need you to be able to comment this hashtag at the end of the question that I ask you. So you're going to answer your question, and then you're going to put hashtag, and the secret phrase for today is hashtag off the charts. Off the charts, right? This is the title of these sessions. No chart work, pure, honest conversations with you guys. So when we do the giveaway towards the end, if you want to take part, I want you to answer the question that I give at the end and end it with hashtag off the charts. Okay? Hoping that's understood. Please keep that noted down. I will be coming back to that towards the end, but this will be the only time that I mention it. Secret phrase for today, hashtag off the charts. Okay? Last time we said it. Now the rest is up to you guys towards the end. Okay? Right, let's get back in touch with where we were for today's topic. I want to start getting into some very, very practical ways in which you guys can start detaching yourself from money. That is the reason that we're all here. That's the reason that you guys are tuned into a session like this. And it's really going to help you as part of your process in making money in the markets. Crazy Kiku says off or of? Off. OFFTHE, off the charts. CHARTS. Okay? Hope that's clear. Right. How can we actually start detaching ourselves from money? First and foremost, for those of you that have tuned in to one of these sessions before, you will understand that every single one of the solutions that I give always starts in the same place. It gets very, very specific after that, but they always start in the same place. And that same place is always a higher level of self-awareness and being more mindful in terms of how you approach the markets, right? So building up a certain level of mindfulness and raising that level of awareness is going to be your first barrier between actually understanding how to create detachment between you and money. Now, if you're ever unclear about how to actually create that detachment, what I want you guys to understand is there are 2 ways that I often encourage it, right? 2 ways that I often encourage it. The first one is meditation. Jay Cops, yes, that is correct. That is correct. For those of you that were tuning in, the secret phrase, that is correct from Jay Coff. That's going to be the spelling of what we're focusing on. That is how we will put it into the giveaway at the end. Okay. Right. As I mentioned, meditation is usually the first thing that I recommend for everybody that is trying to become a little bit more self-aware, trying to build a little bit more of a mindfulness approach in terms of how they approach the markets. Now, the reason meditation can be so powerful is because exercising it every single day, doing a small daily practice over time, it teaches your mind to actually understand how to recognize what you're thinking and experiencing in the moment, right? How to recognize what you're experiencing in the moment, because it is no use taking a bad action or acting on bad behavior and then recognizing in hindsight, oh man, I did that because I was thinking or feeling this and I actually shouldn't have acted on that. It's not the right way to go about it. What we need to be able to do if you are serious about breaking free of your bad habits and no longer acting on, this attachment to money, you have to be able to recognize that you're actually experiencing it. So I find sitting down every single day and just focusing on your breath in and your breath out, what you're going to find at some point is your mind is going to wander. It's going to start thinking about something else. That doesn't mean you failed. The purpose of the meditation is not to clear your mind. The purpose of the meditation is to observe your mind. The more and more you build that mental habit of just observing the mind, the better you are going to get at actually doing the right things over time to be able to break that bad habit. But it all starts from a heightened level of awareness. Now, when you couple meditation together with the second practice that I always recommend, which is a good quality journal, you're going to find that is a recipe to actually give you so much clarity in developing good habits in the markets. Because the journal is going to show you the patterns between your thoughts and your behavior. And your ability to be mindful is going to get you to recognize when those thoughts and behavior appear in real time. So not only are you going to be able to say, well, normally after I take a couple of losses, I tend to get frustrated and try and beat my money back out of the market. Not only can you be prepared for that, but then you're going to have the mindfulness ability to actually be able to recognize when you're starting to experience it. And that's going to be one of the best things to do to create a little bit of space before actually acting from a place of needing money from the markets, right? I'm a fond believer of the idea that it is very, very difficult to change something that you're not truly aware of in the moment. So for this session, for previous sessions, for every session that you will probably see me cover going forward, raising that level of self-awareness is so key. And I promise you, it's a skill set that will pay you in so many other aspects of life, right? Whether it's relationships, whether it's a job, whether it's a business, whether it's health and fitness, being more mindful and being more self-aware in terms of how you approach this game is so important as part of everything that you do going forward. Okay. The second thing that I would encourage if you want to get more focused on detaching from money is you have to shift your mindset to start focusing on your process. And one of the best ways I find to get focused in on your process is actually to build yourself a checklist of things that you should be focusing on. So if you have a specific criteria that you need to follow in order to enter the markets, then write that down on a list, something that you can actually check off point by point to ensure that your mind and your energy is being locked in and focusing on the things that you can control, right? You want to focus on things like the quality of the setup, the amount of risk that you're using, how you're going to enter the market, how you're going to manage the position, how you're going to exit that market, right? These are all things completely within your control. These are all things that are unrelated to money, but you can start building that checklist and focusing yourself on to move the attachment away from just scoring yourself based on money and finding something more consistent that you can actually start to focus on. Now, I actually took this idea, I call these like a pre-trade checklist. I took this idea from what pilots do, because pilots, if for those of you that are not aware, pilots will always go through a pre-flight checklist. It doesn't matter how much of experience they have. It could be their first flight. It could be their 500th flight that they're taking part of. They will go through a pre-flight checklist because they understand if they don't check every area, if they don't follow their process in terms of a safety protocol, there are consequences. If something was to go wrong, it is up to them. It's their responsibility to be able to manage things going forward. You as the trader have to think of this in the exact same way, right? If you have a pre-trade checklist, that should be showing you everything that you need within your control that you should be working through before you actually get into the market. If you can tick off all of those things, then understand everything else going forward is just a simple case of probability. Sometimes you're going to win, sometimes you're going to lose. That's, like I said, that has been the case for me, bread and butter this month. I'm currently down 5R on the month. And every single week, I have looked back over my performance that week and I've told myself, there's nothing that I would change. Everything that I did was in alignment with my plan and I would do it again 100 times over. That's a big part of what is keeping me content, because I'm focused in and I'm content with understanding that I'm doing everything within my control. There's nothing more that I could have done that I didn't know ahead of time that would have changed the outcome of this month, right? This is why losses, periods of drawdown, not taking, money personally, and understanding that this is simply just statistical when it happens. It's not personal. It's not a reflection of you or your strategy over time. This is simply a reflection of you guys understanding that this is how you need to start thinking if you want to improve your performance in the long run. Okay. So turn your trading into a repeatable and easy to act on process. The problem is most people, when they approach the markets, it's like rolling the dice. It's every day is a different outcome. Every day is a different way of approaching things. You don't find consistency in outcomes until you find consistency in terms of your routines. The moment you can do that, you will find it's much easier to make money over that larger sample size. And that's what really counts in the long run. Okay. Point number 3 of how you start to detach yourself from money. I want you to start treating wins and losses like revenue and expenses, right? Wins and losses are not good, like they're not good and bad things. The outcome of the trade is not so relevant in the short term. You have to think of money that comes in and money that goes out just like revenue and expenses. You ever seen a business that has a meltdown over paying their electricity bill or paying staff or putting inventory on their shelves? It doesn't happen. Expenses are a normal part of running every business. And in trading, if you follow your plan, losses are trading expenses. They should be budgeted for. They should be expected. They should be accepted. This is part of the game that we are playing. So I want you guys to start thinking of them in the right way. When you think of things as winning and losing, it's easy to feel good and it's easy to feel bad. But if you think of them as revenue and expenses, well, then you understand that this is how we treat a business, right? When the business makes revenue, that's money coming in, but there are expenses to be paid. And when you pay expenses, you understand that that's not my business closing down. Doesn't mean my business has failed. It means this is the price that I need to pay in order to execute my edge. That's how you start thinking of losses in the right way. That's how you start detaching from money, is you start linking it to a different belief system, right? This is not about winning and losing. This is revenue and expenses. If you want to treat this game like a business, start thinking of it like a business. Start speaking about it like it's a business, because that's what's going to help to change your mentality in the long haul. Okay. Point number 4, limit your exposure in the market. Now, what I mean by this is you have to trade with an amount of money that you can actually afford to lose over time. I can honestly tell you that I've had people that have sent me messages about wanting advice, wanting to do some work together and things like this. And when we start getting into the root of their problem, they turn around and they say, well, I spent my last $100, $200, $500 of savings on a challenge. And now I can't seem to focus. I can't seem to, get myself to stop thinking about money. Every time I take a loss, it kills me. And every time I take a win, I'm over the moon. That's not a path for consistency. So I advise everyone to only trade with an amount of money that they can afford to lose over time. The problem is you have to find your risk appetite, and everybody's number is different. I find if you can't seem to take your mind off of the markets, if you can't seem to stop checking your P&L, if you get weary about the idea of taking 1, 2, 3, 5, 10 losses in a row, you need to check the amount of money that you're risking. Because if you're attached to it, it's going to be very, very difficult to find what you're looking for. When people come to me and they tell me they've spent their last dollar buying a challenge, there's nothing I can really do for you in that instance. There's nothing I can say that will fix that situation. And there's no amount of wisdom or process that I can give you that will outneed your way to make that money back. The reality is, I advise the same thing to everyone, which is you should be saving up enough that your next challenge is not all or nothing. Give yourself a few opportunities, because losses, periods of drawdown, as I've said many times on today's session, these are normal. These are not things that you need to worry about. So remove that detachment over time, and that's what's going to help you to find the optimal amount of risk. Now, in the context of what we're doing here in terms of the prop firm game, this is something that you need to be very, very careful of. Because there are going to be some of you, and I know this because I've had conversations with many people that are in your shoes. There are going to be some of you that have traded a $100 account or a $500 or a $1,000 or a $10,000 account, and you think, yeah, I could do this. I made loads of money. I made 20% last month. The problem is, for that same amount of money, when you invest that into the prop firm space, you can get an exponentially higher amount of capital, right? You could spend a few $100 and get hundreds of thousands of dollars worth of challenges. For some people, that may sound like a fantastic opportunity. And don't get me wrong, it is. But if you don't know what your risk tolerance is, if you don't know if you can handle trading at that level of money, it's too much too soon. My advice is always to start low and scale your way up over time, right? Start with an amount of money that you can afford to lose. Start with an amount of money that is not going to keep you awake at night, right? Crazy Kiku says, what's the first and second point again? I will do a very brief recap as we cover the last point here, right? So that fourth point again was limit your exposure to an amount of money that you're truly comfortable with over time. My fifth and final point, and I often save this as my last recommendation for getting people to detach from money. I save it for my last one because it's the most unpopular one. It's the one that nobody really wants to hear and nobody really wants to follow through with. I'm an advocate of having income outside of your trading, whether that's a job, whether that's a business, whether that's a side hustle. And the more money you can make from that job, that business, or that side hustle, the less you're going to actually care about whether the next trade needs to do anything specific, right? The less pressure you have to make money now, the more rational and logical you're actually going to be able to think. So stick with that job, start that business, create that side hustle. Whatever is going to give you more breathing room in the markets is what's going to be best for you in the long run. Your trading results shouldn't decide whether the bills get paid. And again, it's an unpopular opinion because I'm sure that there are many of you that want to go out and become the full-time trader where your only source of income comes from the markets. I'm not saying it's not possible. The only thing I'm saying is that it creates an unnecessary amount of pressure. I have found I've been in very, very fortunate experiences to meet some really good traders, and the best traders that I have met, they all have multiple sources of income. For some, it's just second. For others, it's multiple, 3, 4, 5 sources. I think the more the better, right? I found, and I'm always honest about this, I think a lot of people like to shy away from this. When I started my coaching business, it was never immediately with the intention of working with traders. I wanted to be a life coach initially, but I found the more money that I made from my coaching business, the less I cared about trading. And ironically, that's what made me a better trader, right? It all worked hand in hand. If we took this conversation back 10 years and I was having a month like I am having at the moment, where I'm 5R down on the month, I haven't secured any payouts, right? It becomes infinitely difficult to start thinking correctly. But actually, a lot of that stress is something that I don't feel at the moment because I understand that my bills are going to be paid. My lifestyle is still going to be able to be lived regardless of what happens in the markets. And so the reality for me, and the one that I encourage for most people, is if you can make money from the markets, fantastic. Go ahead, make it. And if it's going to make more than your business, your job, your side hustle, fantastic. By all means, extra money. But on the months where trading does not pay, at least you've got the job, at least you've got the business, at least you've got the side hustle. That's what's going to help to keep you detached over time. The true key to detachment is just not needing the market to do anything, right? So I'm not saying to give up on your dream of becoming a full-time trader. The only thing that I'm saying is be practical. This game is hard enough as it is. I promise you, it is one of the hardest things that you will ever do. But don't make it harder by thinking that this is an all or nothing game and that you need every trade to pay you, because then you're stacking the odds of success so heavily against you, and you're not doing yourself any favors. Okay? So there were my 5 points to help you to detach from money. Raise your level of awareness. through meditation, through mindfulness, through journaling. Raise that level of awareness was point one. Point two was focus on process-orientated thinking. Focus on the quality of your setup, how much you're going to risk, how you're going to manage positions, how you're going to execute and exit positions, right? All those things that you can control. Process-orientated thinking. That's what gets you across the finish line. Point number three is to treat wins and losses like revenue and expenses. No longer winners, revenue. No longer losses, expenses. Simple rewiring and rephrasing certain things in your mind, it will go a long, long way. Points number 4 and points number 5 closely correlated. Limit your exposure. Only risk an amount of money that you're truly comfortable with. And the last and usually the most unpopular one is ensure that you have an income stream outside of trading. That's the one that, again, most unpopular, but I promise it will do you wonders in being able to trade from a detached state of play. Okay. Right. Last thing that I want to talk to you guys about today. We're going to do we're going to talk about staying detached over time. I then want to give you a very short reflection exercise. We're then going to open up for a few minutes of Q&A, and then we're going to do the all-important giveaway based on and including the secret phrase that I gave you guys earlier. So if you have been active, if you have been tuned in, if you have been paying attention, you guys will know the secret hashtag that we're going to be doing today. And I'm going to be getting you guys to comment that with the question that I give you at the end of today's session. And only those of you that have put the correct hashtag in will be in with an opportunity to win the challenge accounts today, courtesy of ThinkCapital. Okay, right. So how do you actually stay detached over time? I've given you guys 5 principles and things that you can start doing to help create that detachment. But how do you actually stay detached? First and foremost, I think it makes sense to, if you're going to keep a journal, you should also have a review process. I'm about to do a deep dive of my trading over the last 3 to 6 months or so, going into probably the second week of November. That will be when I conclude my trading for 2025. That will be when I sit down and I review my performance over time. And that's where most of your work needs to be done. When you get better at understanding your data, your patterns of behavior, the things that worked well, the things that didn't work so well, your journal is going to become your holy grail. It's going to be the thing that keeps you honest and it keeps you focused on things outside of just P&L, right? Over time, what you're going to find is that good habits tend to become automatic, and that's a good and a bad thing. It's good because they don't require that much work to actually act out over time, but bad because sometimes actually not being mindful of these habits and actions that you have can be detrimental. It opens up the space for complacency. So make sure you're keeping that journal, and make sure if you're doing all the hard work in building that journal over time, make sure you're stopping and actually reviewing everything that you're doing in the long run. Okay. So on top of that, I think it makes sense. And this is something that I am using at the end of each week and each month. I'm doing this on a shorter term perspective, but again, it helps you to remain detached from money. You need to focus on certain performance indicators to ensure that you're tracking the right things. How well did you stick to your strategy? How well did you follow all the rules that you set out for yourself today? How well are you tracking and not acting in a bad emotional state? How quickly can you make decisions when you need to make critical decisions, right? How often are you sticking with your parameters around risk? The more you can track these certain performance indicators, the more likely you are that they will lead to money. Because as I always like to say, P&L is a lagging indicator. The leading indicator is you following your process. If you can follow your process well, and you could do this over a large sample size of time, making money just becomes a byproduct of what you do. And that's a big part of finding success in this game. Okay. Point number 3, and I think an often one that's not spoken about enough, building accountability, right? Accountability, because trading by yourself and having no boss and having nobody to look over your shoulder, it can be very, very difficult. That might be having a trading partner. It might be someone from the ThinkCapital Discord. It might be someone that you know from social media. It might be your mentors community that you're a part of. It might be working with someone like myself, a coach, right? Helping to get you to work at your optimal state. But the choice is yours. You just have to find one that ultimately works for you. It needs to be someone that is honest to call you out when you need it, because there are going to be many times where you do all the wrong things and you need to be able to understand that you might have made money today, but it's not going to pay you in the long run, right? Your accountability partner needs to be able to call you out when your ego takes control. And you need someone that, on the flip side, also has to be able to recognize that you've done the right things. And even though it didn't work out for you on this occasion, you just need to zoom out and focus on what is likely to occur over a much larger sample size. Okay? The fourth and final one, and I find actually this is the one that's often most beneficial in terms of consistency in the long run, is to ensure that you're celebrating the right things. When I'm talking about celebrating, I'm not talking about passing a challenge or securing a payout, because you can get those by doing all the wrong things. That's the hard part of this game, right? I think it makes most sense to celebrate the process. The mind tends to repeat what gets rewarded. You don't focus on things that cause pain. You will focus on things that bring you a reward. And so if you cut a losing trade early, that's probably a good thing, right? If you walk away after your plan is done, that's probably a good thing. If you passed on a tempting setup that was, itching at your itchy trigger finger or FOMO, that's a good thing. If you're able to regulate your emotions, that's a very good thing, right? This is the process that's going to rewire your brain to value process over profits. And that's a really, really big part of consistency. Okay. Last couple of reflection points for you guys before we open up things for a little bit of Q&A, and then we go into the all-important giveaway for today's session. I want to ask you guys some reflection points. And again, you don't have to put these in the chat if you don't want to. Some of them are going to be deep. They're going to be personal. But I want you guys just to take a second to think about these for just a second. Okay, I'm going to say each one and I'm going to pause in between. And I want you guys to just think about what this does for you over time. Okay? As part of your trading, what are you most attached to? As part of your trading, what are you most attached to? For some people, it's money. For some people, it's outcomes. For some people, it's the need to want to be right. What are you attached to specifically? Think about that for a second. Second reflection point. If you reduced your position size by 50%, what would change in your behavior? Right? Think about that. If you reduced your position size by 50%, what would change in your behavior? Okay, interesting one, right? Point number 3. Do you have any external income? And if not, how does that pressure show up in your trading? And point number 4. What would you reward yourself for that has nothing to do with profit? What could you reward yourself for that has nothing to do with profit? Okay, take a few minutes just to think about that. Whether you're watching this live, whether you're watching this back on a recording, after today's session, go back, rewind this part of the session and note these down and just take a second to think about those, right? What are you most attached to? What impact would it have if you reduced your position size by 50%? Do you have external income? And how does that add pressure to your trading? And finally, what could you reward yourself with that has nothing to do with profit? Okay. Hoping that's all clear for you guys. Right. I want to spend just a few minutes opening things up for a little bit of Q&A. I'm going to start with the question from Lyra. I know they were very keen to have an answer to this a little while ago. They were spamming this in the live chat on today's session. But if you do have a question, if you have something that is maybe holding you back in terms of your performance, in terms of your psychology, if you have something that you just want to throw my way, please feel free to throw it in the live chat. And I'm going to spend the next few minutes answering as many of those as I can. And then we will move on to the giveaway for today. Okay. So the first question that we had from Lyra was, how can traders spot when a fear of loss forces them to close a profitable Forex trade too early, right? So we're talking about this idea that there is fear present and they're closing trades too early. My response here would honestly be simple. What is your exit criteria? How should you be getting out of the market? Forget what you've done. How should you be doing it? What are your rules to say this is where I exit the market? It doesn't matter if it's for a profit or for a loss. What are your rules for exiting the market? Because once you know your rules, the moment you realize that you're about to do something outside of your rules, then you get to ask yourself why. And sometimes that might go back to fear. Maybe sometimes it'll go to greed. It'll go to anger, frustration. I don't know, whatever it is. But if you're saying that you're closing trades too early, go back and ask yourself, what is your exit criteria? You'll be surprised that there are a lot of people that I speak to, and the problem is they don't have clarity in their plan. They don't know how they want to exit the market. They don't know how they want to enter the market. They just do what feels right in the moment. And when you leave things down to emotions, it's always going to be a detriment as part of how consistent you are in sticking with it. Okay. So Lyra, I hope that helps. Hope that answers your question. Trade Lord Ibitaj. Apologies. I'm hoping I'm pronouncing that somewhat correctly. I'm sometimes terrible with names. I have a question. I still doubt myself, even though I'm profitable. Okay, so my question for you, my friend, is what specifically are you what are you most fearful of? And when does this tend to play out? Because I tend to find that actually it's quite normal to experience doubt when you take a loss, when you take a couple of losers. And actually experiencing doubt is not the end of the world as long as you don't act on it. Most people get caught up on this idea, and you have to remind yourself in these moments that it's not the emotion that's the problem. It's the action that most people take in response to the emotion. If you're finding that that doubt is not impacting your performance, then it's something that will probably work itself out over time, because you're going to have more and more experiences that reinforce the idea that you're profitable, and that's going to eliminate doubt over time. You have to remember, with many thoughts and emotions, they're not just like switches that you flick and suddenly everything becomes easier in the long run. Okay, they're things that have to be worked out over time. Starboy Roman says, on a 100K account, is it smarter to stick with micros for psychology or switch to full contracts right away? The honest answer is it depends, right? It depends on the rules at which you have to abide by for the prop firm. It also depends on what your personal risk tolerance is. And it also depends on the type of strategy that you have, right? If you have, let's say, for example, a strategy with a 80% win rate, then I would argue that you could probably risk a higher amount on those setups rather than a strategy that has like a 25% win rate. So, take from that what you will. So I think the perfect blend of risk in terms of your position sizing is always a mix between relevant to your account balance, relevant to your personal risk tolerance, and also relevant to your strategy. The more and more you can understand the dynamic between those three things, that's where you find the perfect blend of risk. You see, for most people, what they do is they find something that maybe works for their strategy, but they haven't asked themselves if they're comfortable with that level of money being on the line. And that's where most people's psychology start to break down. What would you suggest for someone to do when they are at their last 1% drawdown? It's a great question. The first thing that I would stop to understand is, why are you in drawdown? Why are you going through drawdown? Because drawdown will occur for one of two reasons. One, you've done everything right and just the market conditions are not in your favor. Or two, you've done everything wrong. And actually, you've been taking setups outside of your strategy and you've taken more losses than needed, right? So the first thing I would say is understand why you're in drawdown. If you're in drawdown because you're taking unnecessary losses, that needs to be something that you stop straight away, step back and understand how to get back on the path of what you need to do. If you're doing all the right things in terms of executing your plan, then I would say determine what is your next best move for you. Like if this is your only opportunity, and again, this is not the option that I advocate, but I know people do take this route. If this is your only option to get funded and you spent the last of your savings buying a challenge, that's not something that I would ever recommend. But if that is the case, then I would say, having 1% risk and giving yourself one opportunity is probably not the best thing for you. Scale back, go down to 0.5, 0.2, 0.1, 0.001% risk, right? And just give yourself that ability to actually be able to start clawing things back. If you are someone that has enough capital and you understand that it might take you a few chances to get funded, for example, or maybe this is your funded account already, you need to decide what's maybe a better use of your time if you have enough capital. If you can afford to reset, reload, try the challenge all over again, then I think sometimes that could be a better option. And again, I say this from experience, right? 2 years ago, I did a challenge, and the objective that I set myself was I wanted to pass this no matter how long it takes. I started that challenge in March. I was very, very conservative. And actually, I went into one of the deepest periods or the longest periods of drawdown that I've ever been in. And I think I survived. It was either 9 or 12 losses in a row. Not only did I survive the losses, I bounced back and I went on to pass the phase one. Again, I started in March. I finished it in November. And the thing that I concluded was it was great to know that I can manage risk, but I would say it wasn't the best use of my time, right? To spend so many months in a phase one. But again, it depends on how you want to approach things. So it depends on the person and kind of where they are in terms of their level of capital, savings, their risk tolerance, and certain things like this. So hope that answers your question, Crazy Kiku. Okay. All right. I think I've covered quite a few questions there in the chat. How many times should we try to pass the challenge when it failed? I think less in terms of, a specific number. I think more in terms of how well are you executing your plan. I think if you've got a good plan and you couple that with the right risk management, then actually it shouldn't take you 10, 15, 20 attempts to get funded. If you're doing things in the right way, all you need to do is basically just navigate, maybe tougher market conditions on occasions. And you should be able to pass a challenge at some point in time. The last challenge run that I did this year, it took me 2 attempts before I got funded. I failed my first challenge, and the second one, I passed phase 1, phase 2, got funded and got paid out. So I'm not saying that has to be the rule of thumb for you, but I don't think, like I said, I don't think it should be taking you 10, 15, 20 attempts. If that's the case, then either you don't actually have an edge or you don't have the right risk management in applying that edge. Once you find the balance between those two things, I don't think it should take you that long. Okay. Right. I think we've answered quite a few questions there. Let's move on to the exciting part of today. And we want to talk about the giveaway. As I mentioned at the very beginning of today's session, ThinkCapital are kind enough to give me 3 $10,000 challenge accounts to give away to you guys on today's call. Now, as usual, what we're going to be doing is for you to be able to take part, you have to do 2 things for me. The first one is you have to answer a question. And that question is, what was your biggest lesson or takeaway from today's session? What was the one thing that you took away that you think has made you really think, change your perspective? Keep that in the forefront of your mind, right? I want you to write that out. And I want you to end that answer. I want you to put at the end of your answer, hashtag, and then the secret phrase that we gave earlier, right? For those of you that were tuned in and have been locked in throughout the session, you guys will know what that secret phrase is. I want you to put the answer, what was your biggest takeaway from today, and then hashtag the secret phrase from today to get you eligible for the giveaway on today's session in and of itself. I'm going to give you guys a few minutes to do this. I want to read a few of the comments that come through, and then I'm going to start plugging them into the giveaway. And then we will we'll work on giving out these accounts. Right, I'm going to start loading this up in the meantime. So please put your biggest giveaway or lesson inside the comments and hashtag the secret phrase that I gave to you guys earlier in order to take part with the giveaway today. Okay, I can see a few of them coming through at the moment. Keep them coming, guys. Keep them coming. Right, we're going to get this loaded up. Right, bear with me 2 seconds, guys. I'm getting the giveaway sorted. Okay, awesome. Good few in there now, right? Let's get this rolling. Right, we want 3 giveaways. Okay, awesome. Right, we're going to throw these in. Sorry, 1 second. I think I didn't exclude duplicates. One, two, three. Okay, yeah, looks good. All right, get ready, guys. Here we go. We're going to count you guys down. And the winners for today are currently up on the screen. Right, I'm going to read them out for you guys. Our first winner for today is at UT International. At UT International. Our second one for today is at Babusi Balopi. At Babusi Balopi. And our third winner for the day is at Trade Lord Bitage. I'm hoping I'm pronouncing that correctly. I will pass these on to the team, but I'm throwing them up on the screen for you guys so you can see the winners of today. Okay, guys, congratulations to everybody that won an account today. If I mentioned your name and if I showed your username on the screen, congratulations, you have won one of 3 $10,000 challenges. For you to be able to claim your prize, please jump into the ThinkCapital Discord and drop Andre a DM. He's going to help to allocate those challenges out. Right, that is all for today, ladies and gentlemen. Thank you all so much for tuning in. Thank you for your questions, your comments, your feedback, all of the interaction that we've had in the live chat throughout the session today. It's been absolutely fantastic to speak to you guys again. I hope you guys have enjoyed today. I hope it's given you some clarity. I hope it's given you some perspective of how to improve your performance in the long run. And I look forward to speaking to you again next week. Thank you all so much. Take care, my friends.